Good evening, everyone. We are going to start the session at 5 minutes past 6, just allowing all the other attendees to be able to actually enter the meeting, and then we'll kick off. Thank you so much for joining.
Good evening, ladies and gentlemen. I trust you're well. My name is Zweletu Dlamini. I am the Membership Portfolio Manager for the JCCI YC. It's a pleasure to have you with us this evening for this evening's webinar. We hope you're warm where you are and that you're opened and that you're ready to listen and learn. We have quite a dynamic, interesting, and amazing speaker this evening for you, who will going to be discussing the issues around tax as it pertains to SARS for entrepreneurs and self-employed people. So we're quite optimistic that you're going to have a fulfilled webinar. To introduce us, we are the JCCI YC, Johannesburg Chamber of Commerce and Industry Youth Commission. We are based in Johannesburg in Auckland Park. We are an organization dedicated to the development of youth entrepreneurs, young professionals, and young business people, and also to the development of small and medium enterprises within South Africa. Our organizational aim and goal is to ensure that we create jobs, ensure that we develop SMMEs, and also create a platform for young business owners, young professionals to network, learn, gain skills capacity, as well as develop themselves. As part of this program and initiative, we decided to host a webinar this evening where we invited a young lady who's a dynamic and incredible speaker who's achieved quite a lot in her sector and has quite the experience and technical capacity and understanding of SARS and tax issues. To that end, allow me to introduce to this evening's speaker, Ms. Sesetu Dekeshe. Ms. Sesetu is a young lady from South Africa, a tax practitioner, entrepreneur, and UAE resident, known for her work in domestic and international tax, tax justice advisory, wealth structuring, and global mobility. She currently holds a Bachelor of Commerce in Law from the University of the Witwatersrand and has further completed her studies through Wits Business School. With more than a decade of experience in management accounting, taxation, banking, assurance, and advisory, she has held positions at the South African Revenue Service, PwC, as well as in Investec. She is based in Johannesburg and Dubai, and her advisory focuses on helping individuals and businesses structure their affairs strategically, navigate complex regulatory frameworks, and maintain compliance in an increasingly global environment. She is the founder of Nala Tax, Nala Advisory, which is nuanced advisory in legal and accounting. It is a boutique tax and legal accounting and wealth advisory firm with a growing presence across South Africa and the United Arab Emirates. NALA was established to support individuals, entrepreneurs, executives, investors, expatriates, and globally mobile family offices navigating increasingly complex legal and wealth matters across multiple jurisdictions. She serves clients across Africa and the GCC, as well as other international markets. We are very pleased and excited to have her speak this evening. The wealth of experience, knowledge, expertise globally and within South Africa will prove beneficial to everyone listening this evening. So we're quite excited and we'd love to welcome our speaker. Thank you very much.
Thank you so much for the warm introduction. Good day, everyone. Good evening. I'm not sure if everyone is joining from South Africa, so good evening. And thank you for joining. And thank you for putting up those slides for me there, NJ. We were struggling technically. I am very disabled. I only know what I do best. Everything else I suck at. So today's conversation, really, I don't want it to be a tax lecture. You know, oftentimes as tax professionals, we want to show off to our clients that we know the legislation. We want to, quote Section 18A of the Income Tax Act. And I realize that, when we do that, a lot of the nuance in tax and compliance gets missed by entrepreneurs. So this evening, we really want to focus on translating what tax and compliance is into, your sort of ordinary language and, sort of package it in a way that you can think about it in your day-to-day day-to-day life. So with entrepreneurs, we realize that, they specialize in all sorts of different things. So we want to just take this time with the JCCI Youth Commission to really try and simplify and really reach out to the budding entrepreneurs out there to be able to make sure that they understand what tax is, they understand what it means to comply as well. Thank you, NJ. We can move to the next slide. So the question is, how well do you really understand how SARS sees your income as an entrepreneur or self-employed individual? And it's important for us to really understand the essence of this question because oftentimes we approach tax with fear. We're scared that, oh goodness, SARS is hunting me down. I've received a letter, a final demand letter. But what you're not sitting and understanding and realizing is that it's really not a battle, it's not a fight. How well do you understand how SARS sees you? I want to please differentiate between an entrepreneur and a self-employed individual from the perspective of SARS. Sometimes we use these terms interchangeably. We think that self-employed means entrepreneur. But from a SARS perspective, there are different tax treatments for this. So if you're a self-employed person, SARS then is going to be interested in your personal income tax declarations. This is when you say, I am the business as the individual. So your self-employed professionals, your examples are you've got your consultants, you've got your freelancers, independent contractors, or people who've got side hustles. Basically, whatever you're doing is in your capacity as most of the time providing a service. So SARS sees that individual being the business, the individual earning the business income. So in the tax world, you'll see on the screen, we've got the individual tax table. So this is the table then that SARS says, okay, This is the income that you are earning or you're declaring your taxable income. And then this is the rate of tax that we are then going to expect from you, or that you are going to be liable for to SARS. We can go to the next one. Then you've got an owner or director. So a lot of people are advised from a legal perspective that it's important to register a company. So you go to CIPC and you register a PTY Ltd. Back in the day, people still registered CC's closed corporations. I think that's been done away with. You also find that other people then also trade as a sole proprietor, but actually employing people in their business. So then you are seen as the owner and you are the director of the business. You're basically saying, I own the business. And so SARS is going to see two separate taxpayers. Remember, we previously spoke about the individual, the self employed. That was the personal income tax implications. And now, when you are saying you are the owner or director and you've got these people that you've employed, SARS is then going to see two separate legal entities, the company and the individual. So, whatever you're declaring as a self employed person, that then is part of your personal income tax. But when you are saying, I'm a PTY Ltd., I'm a incorporated company, then in the tax world, you're then obligated to submit what is called an ITR 14 declaration to SARS, and you also then submit your personal obligations separately. Now, SARS has been doing a lot of work behind the scenes. I know that SARS doesn't have really good PR, and most of the time, when SARS comes for us, it's at enforcement stage and it almost seems adversarial. But having been on the other side of SARS, we definitely would sit down and put together policies and, sort of implement things that will make it easier for entrepreneurs. And so on this page, on this slide, we're reflecting the Small Business Corporation. What that means is that SARS sat down and said, we don't want to tax all companies at the 27% company tax rate. We understand that there are entrepreneurs who are growing their business and aren't necessarily realizing big profits. So let's tax them on a sliding scale. So if you do qualify and you're an entrepreneur that does qualify in your PTY Ltd, your company, you're able to be taxed at a lower rate using the Small Business Corporation table. So you'll see that it is dependent on your taxable income. The more you earn, then the higher you are obligated to pay to SARS. Thank you. Can move to the next one. What does SARS actually want from you? So SARS expectations are actually practical. As an entrepreneur or a self-employed person, it's important for you to register correctly, register for tax. And it's so easy to do that, especially because we're so tech savvy. You simply go onto the e-filing website, or you're able to download the SARS mobile app, fill in those details. It's like subscribing to Netflix. And you're able to register for tax through SARS. That is the first step of compliance. And the second part is to declare accurately. So your income, and there's a misconception that whatever you earn, every 100 Rand or 200 Rand that you earn, a portion of it is going to go to SARS. That's a misconception. SARS understands that in the production of income, in you conducting your business, you've got expenses. Those expenses may be data, fuel, equipment that you need to buy, and we consider those deductible expenses. So in that 100 Rand, if you then go and spend 80 of it towards expenses, and those expenses qualify as deductible expenses, you're able to then subtract that from that 100 Rand and the profit which you will make, and this is a rudimentary example, of course, the profit that you would make, say 20 Rand, is then what the tax will be calculated on. So let's not always think that SARS wants to have a portion of every invoice or every sales receipt that you produce. Take into consideration all your expenses, all the deductions, and then of that, you declare to SARS, and then that tax liability is going to be calculated for you. Very important also, on the third point, to keep records of everything that you do. Sometimes your economic reality and your narrative that, you maybe invoiced a few clients here and there. Maybe there are some clients you didn't manage to invoice, but you had an agreement that they will pay X amount into your bank account. It's important to keep all of those documents, because should you be placed under scrutiny at SARS and they want to audit or verify what you've declared on your e-filing in terms of those submissions, you need to be able to prove that, because SARS will not take your word for it to say, oh no, because they run, for example, an Airbnb, they were earning this money every day from the guests that were staying, but they did a renovation, so they had to pay the contractor some money. But the contractor didn't invoice you, but you maybe paid the contractor in cash. It's going to be difficult to support for that kind of deduction to SARS, and you will find that SARS will simply say, well, you've got no proof. You cannot show us that you spent hundreds on thousands on renovations to try and improve your property. And you find that it will disallow that deduction, and it really does then end up becoming unfair to you. So keep records, keep proof. And I also just want to add that keeping records and keeping proof doesn't necessarily have to be formal. I understand that in early startup stages, not a lot of entrepreneurs or self-employed people can afford to sort of employ or appoint an accountant. So keep record in the sense that you've got a spreadsheet, or keep record in the sense that you have a book or something where you note things down. In fact, I really want us to shy away from the books, rather maybe put it in your notes somewhere on your phone, so that we always make sure that all those things are kept in the cloud. So for example, if you went to the shops and you bought something, take a picture, make sure that it's kept somewhere. And the fourth point is to submit returns. This is the main thing that SARS wants from all self-employed people and entrepreneurs, is to submit returns. When you submit returns, it's important to be able to understand even your business structure. When you simply submit returns and you say, oh, SARS, but I've only just made this amount of money, and you have no structure around that, then you don't even know which kind of incentives you qualify for. Then you don't even understand which kind of, sort of allowable or deductible expenses you have, or maybe things that you can actually present to SARS that will reduce your tax liability. So another point that I'd also want to make is it's important to remember deadlines. And I mean, SARS goes out of their way to do this drive around tax season to remind us of the deadlines. But I don't want to really focus on deadlines and dates and you understanding when this is due and that is due, because then we forget about the structure. And the structure, I believe, is the most important thing. And what do I mean by structure? When you are structured and you've got all your documents in order, you're not scrambling at the last minute because you want to chase a deadline. By the time it's time to submit, everything for you is already in order. Because when you do miss a deadline, SARS unfortunately does penalize you. So this is also another aspect where you find that you're losing a lot of money, or you're leaving a lot of money on the table because you miss a deadline. SARS penalizes you every month of you missing that deadline. So by the time you know what your tax obligation is, you already have, this huge amount in penalties that you must first pay SARS before you are actually considered compliant. So that leads to my last point, number 5. So when you pay on time and you submit your returns on time, you do your declarations on time, you really are going to be able to avoid any interest charges, any penalties, because then that's additional money that must come out of your revenue as an entrepreneur, that must come out of your hard-earned income as a self-employed individual to SARS. Thanks, MJ. We can go to the next one. Now I'd like us to talk about the different tax types. We spoke about how SARS sees you. We spoke about what SARS expects from you as a self-employed person or an entrepreneur. Now I want us to look at the different tax types because also that influences how you then do your submissions. And I also just want to simply make the differentiation between the different tax types to make it simple and easy for you to understand. So you've got the personal income tax, which is PIT. Who is it for? Individuals, sole traders, freelancers. So the question that we should always ask ourselves when we are doing these declarations is, what did you earn basically in your personal capacity? And then you fall under the personal income tax umbrella. Then you've got corporate income tax, which is CIT. Who is it for? Companies. Could be a private company, could be a public company. They fall under the corporate income tax umbrella. So basically, what you need to declare under this tax type is how much profit has the company made. Then you've got value added tax. This is the VAT. Almost all of us pay VAT, even as ordinary citizens, not necessarily being an entrepreneur or a self-employed individual. When we go to the shop, we buy some groceries, there are VAT implications there. So the question is, if you are an entrepreneur and you are charging VAT, you're basically collecting tax on behalf of SARS. So the question is, are you charging VAT in your invoice, in your receipts? Are you collecting tax on behalf of SARS? Then that would then be the value added tax. So I want to also make a differentiation to say you've got input VAT, which is what the business pays for goods and services, like when you receive an invoice and it's a tax invoice with 15% VAT that's included, or you're purchasing something and your receipt comes with VAT, that's you as a business paying for the goods and services. So you would declare input VAT to SARS, and then you would also declare output VAT to SARS. That's when you are issuing out your invoices or your receipts, or basically saying to your clients or your customers that you are charging them VAT. Now, the advantage of being VAT compliant is that when you have expenses that have VAT consequences, you're able to declare that to SARS and claim that back. And in the same way that you are able to declare to SARS that you are charging customers or clients 15% for goods and services, and you are able to give that or pay over that tax to SARS because you are collecting on behalf of SARS. Usually in these situations, I just want to put in that tip and that hint and that trick, is that if you are a VAT registered service provider or you have a VAT registered business, you will find that most of the time you are in a refund position. So that's an opportunity. If you do meet the thresholds for SARS to register for VAT, I would definitely encourage every entrepreneur to do that, because there is a benefit to collecting tax on behalf of SARS. And then we've got pay as you earn. So the question for a self-employed person, an entrepreneur, when it comes to the tax type for pay as you earn, is, have you become an employer? Let's not think about it on the side of, or from the perspective when we are employees and we get that pay slip and there's PAYE being deducted on that. When you are an employer, you then take that PAYE from your employees, and it is your obligation to then pay over that money to SARS and remit that PAYE that has been deducted from your employee over to SARS. Obviously, if you are employing people who meet that threshold. We can move on to the next one. Thanks. So there are more tax types to consider depending on the industry that you are operating in, and it really gets more nuanced, it really gets more dynamic and quite complex. I just want to share those different tax types briefly, but we're not going to spend too much time on them. So you've got dividends tax. You're basically saying, I pay profits to shareholders, and then SARS is basically wanting to know, is it in a form of a salary? Is it a form of a dividend? Is it a form of a loan? Or is it something else? Then you've got withholding taxes. So this is for the entrepreneur or the business person who says, I receive and I make cross-border payments. So then you will need to tell SARS which country has taxing rights. Because not all the time that when you are doing cross-border payments are your tax obligations falling within the scope of SARS, which is South Africa. Then you've got capital gains tax or transfer duty. This is for the entrepreneur um, who says, I buy, sell, or transfer assets, especially crypto. There's another thing that I've realized with some of the clients who do approach me, who are cryptopreneurs, who say, look, but I made a loss, but SARS saw this huge amount that I put into this platform, but I made a loss. And I'm like, sure, absolutely. Tell SARS that. Tell SARS that you made a loss so that you are not going to be liable for any capital gain. So this is basically saying, or SARS asking, was there a taxable disposal, whether it's a gain or a loss? Let SARS know. It doesn't mean that you're going to be taxed on that automatically. Then you've got, your tax, which is related to your trusts. So a lot of people do set up trusts, and trusts have their own separate tax implications. They don't fall under the corporate income tax. They don't fall under personal income tax. They are taxed on their own in their own way. And then you've got donations tax and estate duty. Basically, you are saying, I build generational wealth, or I want assets protected for my family, which is particularly good for succession planning. Then SARS is going to want to know who owns the asset, who is benefiting, and what tax event occurred. Then you've got the different specialist or the industry specific taxes, your air passenger tax. I know recently we had the Fly SA Fair sale for R1. Tickets were going for R1, but by the time it's checkout, you are now liable for almost R1,000 because there were additional taxes added to that flight ticket price. So that is the air passenger tax. You've got the diamond export levy, excise duties and levies, international oil compensation fund levy. You've got carbon taxes, you've got the skills development levy, unemployment insurance fund, that's also a tax, etc. The list does go on. Can we move on to the next one? Thank you. So now here are the red flags to avoid, or the common mistakes. I realized that it's not that entrepreneurs or self-employed people don't know what they're doing. There's a fear. And I'm not too sure why there's a fear around our tax matters. It's as though we want to put it off as the last thing. But taxes, much like death, is inevitable. At some point, we have to deal with it. And the best way to deal with it is to be proactive. So, mistake number one is an entrepreneur saying, I registered a company, so I'm sorted. So registration of that company is only the beginning. Registration of that company is you just recognizing that you're now building an entity or this structure, infrastructure that is outside of yourself. You are now building this structure that is going to hold your income, that is going to grow. You're going to service clients, or you're going to be providing a product in the market, and you register it under this specific company. That's only the beginning. You don't register and let it go and you just continue functioning as if you don't have any compliance relating to that. I think that is the first mistake that I see, that people saying, I've got the business account, I've got the registered company, I'm good to go. It's not a really good approach. It's definitely a mistake, because then you forget what your obligations are. And by the time your obligations come, you're so under pressure, you have anxiety, you don't even know where to start to begin, and things just become a mess. Mistake number 2 is an entrepreneur saying, I didn't make profit, so I ignored SARS. That's fine. You didn't make profit. Let SARS know that you didn't make the profit. SARS understands that not every business can make a profit, but let them know. Because once you don't adhere to your filing obligations, SARS is then going to try and find bank accounts linked to your name or to your company, see all the money that's been flowing in, and then decide on your behalf that this is what you owe them. And by the time SARS does that assessment for you and says this is what you actually owe them, they have calculated their own amount that you probably can't even afford at that stage, because you had business expenses, you had employees to pay, you had deductibles, but you didn't declare that to SARS. Or maybe that money wasn't necessarily money that you generated to the business, from the business. Let SARS know that no, that was not income that was related to the business. I actually didn't make money, in terms of, business income. Then the other mistake is that you find that you've got entrepreneurs and self-employed people who really do outsource the work so that they can really focus on their business and keep the main thing, which is very important. But let's remember that when we outsource, our filing and our compliance and our SARS matters and our accounting matters, that we're still responsible for them. We outsource, but we do not neglect. So that's another common mistake that I see, and a red flag, to say my accountant will handle everything, but you're not even sure how they are doing it and if they are doing it in your best interest. Because as a business owner, you understand your economic reality better than an accountant or a tax practitioner. Ours is to make sure that you are compliant. Ours is to make sure that you meet the reporting standards, and that you don't fall under scrutiny with SARS unnecessarily. And of course, mistakes happen. So if you're sitting there and you're thinking, oh dear, I need to go back to historic tax years and fix this and fix that, you're still able to do that. It's not late. I always say it's never too late. We can always fix something as long as we can prove it and as long as it was your economic reality. We can move on to the next slide. Now let's talk about lifestyle audits. Does your structure support your reality? I don't think SARS is jealous about our success. I don't think SARS is jealous about us flashing our Porsches. I don't think SARS has an issue with us living in estates and going on trips and, shopping at Louis Vuitton, Diamond Walk every other day. I don't think SARS has an issue with that. SARS has an issue when that is your lifestyle, but on your e-filing, you keep submitting zeros. You are saying you don't have business income, but on Instagram, you are popping champagne. And the champagne is not the problem. It's the mismatch that is the problem. So you need to sit and ask, does your financial story make sense? SARS wants to know, is your declared income correct, your assets correct, and can you explain your financial activity? SARS has done so much in investing in technology and getting that third-party data. So there's no hiding if you are participating in the financial system in South Africa. They've, in fact, all over the world, but that's a more broader perspective. These tax revenue authorities are all communicating together now. But when SARS checks your bank account and sees money coming in and out. They want to understand what it is for. So it's important to make sure that your bank activity corresponds with your tax return. That's why when you submit those zeros, almost most often than not, you will go through a verification audit with SARS. SARS will want to audit you because they have discovered a mismatch. And so it's important to make sure that what is happening in your bank activity is reflected in your tax return, not declaring zeros. And actually declaring your income and declaring your expenses. I mean, in some instances, self-employed people or entrepreneurs can maybe get a project from government, a tender, and they have to buy equipment or they have to buy vehicles. And maybe in that fleet of vehicles, the director says, look, I want a comfortable car. Buy that comfortable car, but let SARS know that this was a deductible expense. You don't just buy that comfortable car, not declare it to SARS and declare the income relating to how you managed to afford that um, comfortable car or that luxury car, because that's where the problem lies. So simply what I'm saying is, let's be smart and proactive. If you feel like in your business you're doing so well, it's time to go purchase a Lamborghini. Be able to prove to SARS that income. You are also going to be able to, if that is a car that you are using in conducting your business, to deduct that from your income, and it will definitely reduce your tax liability to SARS. Last point, does your company's success match your personal financial story? So the simple example that I have here is you've got ABC Pty Limited. They make 5 million Rand in a tax year, and the director declares personal income of only 200,000 Rand. Now, 200,000 Rand divided by 12 months doesn't make sense, because this is the same director whose company's revenue is 5 million Rand. And, when SARS looks at the director's lifestyle, there's luxury cars, expensive travel, designer wear, there's a mismatch. But if you really have a story, sometimes, people have trust funds and they've got inheritance. But if you really have a story and a narrative behind that, let SARS know. It is always better to lay your cards straight with SARS so that they don't come for you, than to try and hide and try to beat the system, because then that's when SARS is going to want to investigate you further. Remember, at SARS, there are auditors, and there are auditors there at SARS who are employed, and they've got KPIs that need to be met. So always make sure, as an entrepreneur and as a business owner, that you are always caught on the right side. We can move to the next one. And being caught on the right side means that we are proactive about our tax affairs, and it means that we are building the right structure when it comes to tax. So, are you planning your tax position early, or are you only reacting when SARS asks? I really want us to change our mindset when we approach tax and compliance. I know it's tedious. I know it's sometimes it just feels like it's complicated, it's too high level, it just doesn't make sense. But I think most of the time it's our mindset and how we approach it, because we're still stuck in the old way of thinking. In the old way of thinking, SARS just wants my money, or if I don't submit anything, nothing will happen, or let me not show SARS too much. SARS can't know all of my business. Or we think that tax planning is only for rich people. I've had the opportunity of working with a lot of young professionals who have investments and earn interest income and are taking advantage of the tax-free savings. Some of them have rental income. And when we speak in our consultations and I ask them the probing questions, I realize that the only income they ever want to focus on, for example, is the salary that they are paid for by their employer. And, it's only after I asked those probing questions I realized, oh, they've actually invested in property and are earning property or rental income that they don't declare to SARS. But it's actually a bonded property, which means you can declare it to SARS and you can tell SARS it's a bonded property. You want to claim the interest on your bond, which oftentimes results in a tax refund. So let's not always think that tax planning is only for rich people. Let SARS know. There's no need to hide anything. There are incentives and there are ways to navigate tax legally. So I want us to move to a new way of thinking. A new way of thinking where we sit and we understand the rules. Before you make a decision, you ask yourself, what are the tax implications? Recently, I did a consult with a young man. He impressed me a lot. He got inheritance from his parents and he decided that I'm going to open a trust. And I think that's great because that's what the wealthy people do. Generational wealth is passed on through the trust. But before he did that, he said, look, I want to consult with you. What are the tax implications? So before we even got into the structuring, at least he sat and he got an understanding of what that full picture is going to look like. Whose name are the properties in? What does it mean putting them in the trust? And as a result, we were able to save so much in terms of their tax structure and the transfer duty and the estate duty in terms of those properties just by being proactive and understanding the rules. The next one is to use the provisions available to you. Keep records. I cannot emphasize this. Keep records. Just keep records. Have evidence. Have proof that something happened. And, it's important to also be able to explain your financial reality and eventually make informed decisions. There's nothing wrong with asking questions. In lectures, we used to sit and our lecturers would say, there's no stupid question. There literally isn't, because we're also gifted in different ways. My specialization is in something else that I have no knowledge of, and I must go ask someone who has knowledge of it to help me understand so that I can make a decision, and vice versa. I think we're done. NJ, do you have another slide? Thank you. Thank you so much.
Thank you very much, Setu. That was quite informative, compelling, and also very insightful. Thank you so much for taking us through your depth of knowledge, your view, your background, your understanding of the tax system, and also of SARS. I think it was very informative, and I learned quite a lot. And I'm hoping that our fellow joiners also learned. So now what we want to do is just ask a few questions just to explore more, get some more information and understanding. We're going to open up a Q&A to the audience. You can either raise your hand, then we'll call upon you, and then you can verbally ask your question, or you can write your question in the chat if you're a bit shy. But I think where we want to start off, Sisetu, is just to have a bit more in-depth discussion about some of the things that you've spoken about. And one thing that is quite important to a lot of entrepreneurs and SMME owners is the idea of paying a salary. You spoke about PAYE earlier on. How does one go about paying themselves a salary as a self-employed entrepreneur or a small business owner? And how should they approach and think about that as it relates to expenses? I think is an important question. Thank you.
Thank you for such an important question. Unfortunately, I don't have one answer. It really depends on your context. What I can tell you is, if you are the director of the company and probably the only employee in that company, I usually encourage, directors to pay themselves a salary because your tax implications are going to be based on the pay as you earn, the table that I had showed. But if you are paying yourself profits, the dividends after you've made money in your business, then SARS is going to want a flat rate of about 20% of that. So you kind of do the numbers and play around to say, do I want to give SARS 20% of my 10,000 Rand? Or am I earning this much within a certain bracket, and you're able to see which amount works for you and which amount doesn't work. So there are two ways of paying yourself, either as an employee, which has more benefits actually, and there's also the other option of paying yourself as a director. But I think it works in, if you find yourself being a director of multiple companies.
Thank you for that, Sisetu. And I think another question around expenses that where directors often make mistakes or sometimes causes issues is what directors are claiming as business expenses: food, petrol, airtime, um, personal expenses, and then conflating those personal expenses with business expenses. How does one start to think about that, correct that, and maybe navigate that?
Thank you, Zeli. That's actually a very good question. Oftentimes, we are tempted to use our business account as a personal wallet, and that's quite incorrect. Personal expenses are personal expenses at the end of the day. And I think the simple way to always think about it is this thing that I am paying for is it in the production of my income? Okay. So if, for example, I think a lot of people entertain clients and want to claim entertainment expenses and that kind of thing, and that's allowed to a certain extent. But you need to ask yourself, was it in the production of my income? Did it generate a sale for me? Did it generate income for me? I think that's a simple way of looking at that expenses topic without me having to sort of say that Section 11E expenses according to the Income Tax Act. But I think that's the simplest way to really look at it. What I want to claim as a deduction, as an expense, was it incurred in the production of my income? If it's yes, claim it as an expense. If it's no, you are buying a chocolate at Spa, definitely cannot be an expense in your business.
Thank you very much. I'd like to hand over to Les. I see you have your hand up. I think the name is Les, for a question. If you can unmute yourself and then ask your question, please. Hi, Les. You can ask your question.
Hi, can you hear me?
Yes, we can hear you now. Please go ahead.
All right, sorry about that. I was asking with regards to VAT. So with regards to VAT, who would need to register for VAT and why, if I may ask? And again, would Setu maybe share with us a bit of tax strategies, if ever that's allowed? And the third question, with regards to huge withdrawals, how are those declared? I saw you put a nice woolies back there. How are those huge withdrawals that are put in that woolies bag declared?
We don't know why Les wants to know that, but it's fine. Sisetu, please maybe.
Les, Les, you're being controversial. I put that Woolies bag there to basically say that, SARS wants to know what's happening with the money. Have the money, but SARS needs to know what's happening with the money. So it depends what you mean by your withdrawals. I mean, we know the controversy around the Woolies bag. These were incentives that were being given, so that certain projects can be released and tenders can be released. Unfortunately, that's not allowed. It's not allowed. But when you say withdrawals, I want you to maybe specify if you want an answer in this, but I will definitely move on to the other two questions. Okay.
I think you can move on. That's fine.
Okay. Okay. Thank you, Liz. So when it comes to value added tax, before we look at the mandatory sort of registration and the compulsory registration, I want us to first look or answer or ask yourself rather as an entrepreneur or a business owner, are you charging VAT? So if you're charging VAT, and that's 15% to your customers or clients, then you definitely need to register for VAT, because you're basically saying that you're acting as an agent of SARS. Now, VAT is mandatory. There's the mandatory VAT. Sorry, I said mandatory and compulsory, which is basically the same thing. I wanted to say mandatory and voluntary. So there's the mandatory registration, where you volunteer. The SARS says, okay, your sales or your income is exceeding 120,000 Rand per annum. So you want to probably claim back on taxes for that. You are able to voluntarily register to SARS and benefit from what I had briefly discussed, the input VAT and the output VAT reconciliation. So hint, hint, that's another tax strategy. Then there's compulsory registration. So if you foresee in your business, or if you already in your business are making an annual turnover of more than 2.3 million Rand, then you must register for that from a SARS perspective. Because basically what you're saying is that you are charging VAT and you're making this income, or you're generating this much income, and so you are an agent of SARS and you must pay over that VAT to SARS. I hope that answers your question.
I think Les is on. Yes, Les.
Well, yeah, no, I'm answered, but there's one question that I think Setu would need to answer with regards to tax strategies, if ever she's able to share that.
So tax strategies are contextual. And it's difficult for me to be able to say, here's a hint, here's a tip, when I don't even know what industry you are in, what your income looks like, what your financial activity looks like. So I will be giving those hints here and there. But when it comes to specific tax strategies, it has to be specific to your industry and or your function and what you do. So I would encourage you to maybe then, if you really are interested and you want us to take this offline, I do offer complimentary clarity calls for 15 minutes. We can quickly have that chat. You can book on our website.
All right, thank you.
Thank you very much, Setu. The NALA website is available. It is NALA, NALA.Africa. It's in the chat as well. You can open up the link and then go and book a session, or go and then get in contact with Setu. I just want to take a question from the chat currently from Tobega. For an SME that is just starting out, what are some of the prerequisites to have? After e-filing, what should we do next? So I'm just going to repeat the question. For an SME that is just starting out, what are some of the prerequisites to have? And after e-filing, what should we do next?
Thank you so much, Tobeka, for that question. And well done for starting. That's always the difficult part, starting. So after you've registered your company and you've got all your documents, make sure that you're registered for e-filing, make sure that you're registered for tax, and know where your sort of your financial year end lies. I think this is the most important thing that I always try to emphasize, that just understand your financial year end as a company, and also understand the tax year, because the tax year is not like the calendar year. In South Africa, the tax year runs from the 1st of March in the current year and ends on the 28th of February in the following year. For example, this year we are already looking at 2027, or in the 2027 tax year, which started on the 1st of March 2026 and ends on the 28th of February 2027. So even when we're talking about tax season now, which is open now, it's in relation to 2026, which means we're already talking about a tax year that is already passed. So I would say the next thing is to understand and align your tax year with your financial year for the business, because then you're going to be able to pattern plan and be able to diarize those different deadlines. So with a SME that's registered PIC, I'm assuming it's a PTY. um, there are things that you need to submit, like provisional tax payments. You need to check for those deadlines. They differ, but SARS always publishes those dates on their website. You need to look for the provisional tax deadlines. You need to also understand the filing for your annual returns or your annual tax returns, those deadlines. I think those are the main things that you need to try and understand and do next when you are starting out.
Thank you very much, Sesetu. I'd like to find out what are annual returns? Maybe explain that to people so that they are aware.
That's actually a brilliant question. Annual returns are for CIPC. So CIPC is its own separate entity where you are basically renewing your business license, if I can put it like that. So every year you tell CIPC, sorry, that you are renewing your company, you're still operating, and we call those annual returns. And then tax returns are separate from annual returns. They don't go together. But what you do declare sometimes on your annual returns, because it's financial activity, is what you'll probably end up declaring as well in your tax returns, which is what you declare and submit to SARS. So annual returns, think CIPC. Tax returns or tax filing is the income and the declarations and the expenses you want to deduct, and basically all the things that were happening in terms of your financial activity where you want to calculate your final tax obligation with SARS. I see a hand.
Consultant. Please, may you go ahead and unmute and ask?
Hi, can you guys hear me?
Yes,
Yes, we can.
ma'am.
Hi, so I'm so sorry. I was trying to keep myself quiet. I told myself I'm not going to say anything. I'm just going to listen and observe. But then, because I'm an SME nerd myself, now I can't find myself keeping quiet. Hi, Seseto. I think it was such a brilliant session. As a person who is a colleague in the space, I think it was really, really nice. I think you've given me some inspiration. So yeah, kudos to you, definitely for sure. Um, I'm not taking up Sesitu's light or shine in any way, and I do hope that you don't think that I'm speaking over you in any way. There's a lady here who said that she is just recently registered, right? And I think this is the problem, and Sesatu, you'll probably agree, that we have with entrepreneurs all the time, in that there are three main issues that they tend to do, right? The first one is not prioritizing their finance function. Sesatu, you can agree with me with this, in that a lot of entrepreneurs tend to think that the finance function is only important when it's a tick box exercise. So when I now need to come to file or now do my annual financial statements, or I need to do something with the bank, that's only when it's important. Also said you had obviously spoken about the important things of a CIPC and your year end, and also when it is that you need to communicate with SARS and the importance of that. But please do keep in mind that it is also very important to not do everything yourself. You are not able to do everything yourself. Earlier in the session, she talked about everyone having different talents. I always say to entrepreneurs that, for example, Sesetu and I are really good at accounting. You are really good at baking, or you are really good at I don't know, steel production or whatever it is that you're really good at. So be good at what you're good at, and the things that you don't know well, it's okay for you to seek help and assistance from somebody else. So don't leave out the numbers for last minute. Please do use the numbers to tell stories. There's a guy that asked about the tax strategies. I think his name was Liz. And it was hilarious because I was watching Sese to think to myself, now how am I going to answer this? Because she's right, it's very contextual. It's very difficult to just say, okay, this is the general tax strategy, because it does depend on what the actual question is, what the scenario is. Are we talking about payee? Are we talking about your expenses? Are we talking about VAT, right? So keeping that in mind, it means that you also have to understand that when you are looking at your business, every line item is what I can call it. Can I use line item as a layman's term? Is it?
I'm sure you can.
Okay, I'm so sorry. On the financial statements does tell a story, right? So when you're comparing your year on year, it does tell a story of, why there's an increase there. And people like Seseto are there, and other professionals are there in the space to be able to tell you or ask you the questions that they need to ask you. Why is there an increase? What are you trying to achieve? What do you feel went wrong? Why was there a decrease? So those kind of things are important. So just to the lady who's just starting, congratulations, a huge congratulations. But three main things outside of the statutory compliance and making sure that you're, doing the tick box exercises. Don't try and do everything yourself. Do speak to a professional when you need the help, and do allow the financial statements or your finances to tell you the story of what's going on in your business so that you can have a clearer idea, picture, as well as strategy of what's going on in your business. Okay, that's all I wanted to say. Thanks, bye.
Thank you.
Um, Thank you very much for that insight and that input as well. I think it was very valuable. I think just a question to Sisetu before I just take a question in the chat. If someone is currently behind on their SARS returns and they're now in a negative position because they haven't filed or they're filing late, what should they do and what approach should they take?
That's a very tough position to be in, Zoletu. But a lot of entrepreneurs are in that situation. It's not too late. I would say the first thing is to make sure your compliance is up to date. So all those years that you were not filing your tax returns, you're able to submit them um, retrospectively. And once you are compliant, I always tell my clients, then we can ask SARS for grace and mercy regarding those penalties, because we are able as tax practitioners to motivate and ask for SARS to reverse those penalties. So if you find yourself with penalties of about 20,000 Rand, a portion of that, or even depending on the strength of that motivation, can be reversed, but only if you show SARS that you've done right by them, you've made sure all compliance is done and up to scratch, and then you've regularized your tax position, and then you're able to then get those penalties reversed. But the penalties keep compounding the more you delay your compliance. So it's never too late, but never too late doesn't mean that you will do it one day in the future. The consequences are still happening in the background.
Okay, thank you very much for that answer. Question from the chat from Ndomeleze is, what are the requirements to register as a small business corporation, um, and or turnover tax? So what are the requirements to register as a small business corporation and turnover tax?
Thank you so much for that question, Domeleze. When you don't necessarily, as a business, have to follow a formal process of registering for small business corporation tax or to fall under that category. But when you are doing your declarations on the SARS e-filing platform, your ITR 14, you are able to declare to say, but my profit or my turnover is within a certain range, and that calculation is going to be done. What's just important for you is to sit and understand which threshold you fall under. It's on the SARS website. I also just shared it a little bit, but we didn't go into the amounts and the numbers on the presentation. And you're able to see, okay, do I fall within less than 100,000 in profit? Okay, then it means then I'm going to be part or classified or seen as a small business corporation. So it's not a registration that you need to do where there's certain criteria that you need to meet from a SARS perspective in order to register, but it's different in terms of who gets to qualify. Now, if you want to qualify under the small business corporation regime, you need to make sure that the way you put your company together from a CIPC perspective, that all the directors are natural persons. So don't have a company that is owned by another company and think that you will fall under or qualify to be classified as a small business corporation.
Thank you very much for that question. Just a reminder, if you do have a question, you can write it in the chat or you can raise your hand and just ask your question. I think a question that I would want to know is, what is one thing that you would encourage an entrepreneur to do differently? If you were to just give us one takeaway to say, this is what you should be doing starting from tomorrow to make sure that you're tax compliant going forward.
Sure, that's a very tough one, giving one takeaway. Um, but a lot of people, I think, have read Rich Dad, Poor Dad. There's a client who quoted it to me the other day. And he said that in that book, it was advised that, if you want to be successful in life, you must have an accountant, a lawyer, and, basically there was 3 professionals on your payroll. Or basically who've got your back. And I also want to say the same thing to entrepreneurs, even if you are on the come up. I've seen wealth on a global scale, and what I can say is that wealthy people have someone doing all these other things for them. So if you're an entrepreneur, find a tax professional to help you. And I think that's why I also just make sure that what I do is accessible and the work that I do is accessible. The fees that I charge are accessible, because I've seen the plight of entrepreneurs not being able to get that help that they need because they cannot afford a KPMG invoice or a PwC invoice. But trust me, that is the secret ingredient to success. Having professionals who are going to assist you, a tax accountant, a lawyer, or a doctor on call. Think of it that way. I think that's what all entrepreneurs need. That's the secret ingredient that I would say they need in order to build wealth and grow their structures.
Sasetu, you run your business in both Dubai and South Africa. Can you tell us a bit more about what has led to that and why that is now the case, where you're dealing with clients in Dubai and in South Africa?
Okay, so what happened, it was actually quite a natural transition for me. I started my advisory last year, and it was just, South African clientele. But then I realized that we actually have a lot of South Africans living abroad. So the moment people affiliated or associated SARS with me, they would reach out to me to say, I'm actually in the UAE and I've been trying to sort out my SARS matters. Can you help me sort out my SARS matters? And so that's where I took the opportunity to be the one bridging that gap. There are a lot of professionals who are living in GCC countries because they get to benefit from 0% income tax on their personal income tax. I mean, they buy properties, they invest, but when they sell those in these GCC countries like your Dubai, your UAE, and your Bahrain or your Qatar, they don't actually have to pay capital gains tax. So then you realize that there's even more South Africans who are building their wealth globally and family offices. So it just led me to this whole network of people that I didn't even know existed. And so that's why I say it was just a really natural transition to really then just be able to get into that space as a South African for other South Africans and really build my advisory as a gateway to, Africa and the UAE and other international markets.
And just as an entrepreneur and a business owner yourself, what do you think are the factors that have led to your success?
Zolita, am I successful?
Well, you're growing and you're in the UAE.
I don't know about success, but being human-centered. I think a lot of people want to say, I'll just ask ChatGPT, or a lot of businesses are really relying on ChatGPT. And for me, I think being the founder who deals with their clients directly, being human-centered, understanding where they're coming from rather than trying to intimidate them about deadlines and tax knowledge and what they've done wrong and shaming them. I think that's the difference, because in my mind, I feel being a self-employed individual, an entrepreneur, or a business owner, you're there to provide a solution to a problem. So, providing a solution to a problem, yes, your product may be great, but it can be pretty, but how are you solving that other person's problem with your product or your services? And so, for me, that is my core value of what I do and why I do what I do, and maybe why you think I'm successful.
Okay, thank you very much for that. Sisetu can be found on her website, Nala Africa, NALA dot Africa, Africa. You can contact her there and get more information about how to reach out to her for her tax and advisory services. Sisetu, we're very grateful and thankful for the information that you've imparted on us this evening. I'm just going to leave space for one more question in either hands or in the chat. If there isn't any, I'm going to hand over to our chair lady, Nonjabulo, who will then close the session for us. Thank you very much. Nonjabulo?
Thank you, sir. Zwelethhu. Sisethu, thank you so much. I think the sentiments that have been shared on the chat, and everyone that was able to take the time to actually join the session, we thank you for the great knowledge. I think a lot of things that we were unsure of. I'll just highlight a few based on your presentation. Firstly, is that the misconception that we normally have as SMEs is that, tax is killing small businesses, but yet you highlighted, the opportunities, as you just mentioned now, in terms of being able to operate as a small corporation, right? And the benefits that come with that when it comes to the taxes, because ideally what you said is that SARS does want your business to grow, right? It's not meant to try and actually penalize you or to burden your business to a point where you're not able to actually succeed. So I think that is a very good takeaway for us as business owners, to understand that this is a relationship, with SARS. And before we close off, I think I really liked that part of the presentation that you were sharing had highlighting the use of e-filing. And from what I do in terms of the businesses that I teach, in terms of financial wellness, is that a lot of people unfortunately get scammed. I mean, tax season is people, when they filing, they get these weird emails saying that they need to pay now. So what I tend to tell people is that, I mean, if it's not on your e-filing under correspondence, then it's not from SARS, right? So I think that's just the only thing that I wanted to highlight, that, the reliance of the right information from the right people, I think is one thing that we need to take away, of course. And what I appreciate is the fact that you are understanding, and by you actually admitting that, there are businesses that are not going to be able to afford the consultation fees that are charged by these other organizations. But this is why you are thriving and succeeding within your space, because you've are already actually recognize this market, and you are there to try and help us as SMEs who are not going to be able to afford those KPMG bills currently, because we're still growing. So if a lot of people that are joining us, understanding that Sesetu and Nala Africa are here to grow with you, take the opportunity. And with that said, thank you so much, Sesetu, for your assistance, your guidance, your teachings. We really appreciate you taking the time, and we wish you all the best. And as we mentioned, please go to her website to be able to book that consultation. And she mentioned, I mean, she offers a free consult for 15 minutes so that you can be able to actually get assistance in terms of some of the tax matters. And like she already echoed, that she offers reasonable consultation fees to try and actually alleviate that pressure from you as an SMME to make sure that you get yourself tax compliant, right, without finding or feeling the burden of having to pay the likes of experts like Sesetu. Once again, Sesetu, thank you for your brilliance. Please enjoy the rest of the evening, everyone, and good night.
Thank you. Good night.